Ladies and gentlemen, welcome back to the channel. Ape stock on Friday went kind of wild. It's up 21%, and that's where it closed after hours trading. And it makes you wonder, is the opportunity in Ape or AMC? And I think that is something that we should talk about here on the channel, because obviously if Ape is going up 20%, over 20%, there's got to be a reason behind it. And absolutely 100% there is, and we're going to talk about that here in this video, and ultimately where I think the real potential lies. Is it Ape? Is it AMC? We'll get into it here in this video. Now, besides that, we'll talk about the economic data for this upcoming week. We will talk about the earnings as well, because that is also going to be a huge story of next week, guys. If earnings are okay or pretty much at expectations for Apple, Google, Amazon, the markets will continue to stay resilient, and you don't have to see new lows in the stock market like a lot of analysts have called for in Q1 or Q2 2023. It's all going to come down to earnings, and specifically Apple, Google, Amazon. Tesla, lesser part of this is Tesla, but you had Tesla earnings this last week. You also had Microsoft earnings, which is the second most important stock in the stock market, right behind Apple, and they had decent earnings. They didn't give us great guidance, but they had decent earnings. But again, Microsoft tends to have decent earnings every time they report. They tend to have stickier business models. So next week, earnings are going to be a key, and you guys should be prepared and know when these companies will report earnings for your trading strategies and your investments, guys. So we're going to get into both of those situations. We're also going to look at the Ortex data and the Stocko tracker data, as well as the technicals on Ape and AMC, because I think that is also warranted, because after all, if I like one or the other more, there's still opportunity in both of them, and they both can be utilized to be traded off of, because odds are if AMC rallies, Ape's probably going to rally as well, or vice versa. Now, let's get into this video, guys. This article from Forbes says AMC will be raising new equity capital. AMC announced a plan to raise $110 million in new equity capital. The company intends to sell $110 million of its Ape units to Antara Capital, one of the significant debt holders of the company. Ape units will sell at 66 cents a piece. Now, for the sake of making this video shorter rather than longer, I did go ahead and just condense the two things that you really need to know that is affecting this stock. So Antara Capital has agreed to hold the Ape shares they buy for at least 90 days. And I think that is the most bullish thing with this whole thing, is they're going to hold these shares, this $110 million worth of Ape shares, for at least 90 days. It is going to lock up the flow, and I think that is something people are bullish on. But at the same time, you got to be bullish on another fund wanting to own the shares instead of the debt, because the debt is more valuable, right? If you are a private investor or Antara Capital that has AMC debt, if AMC theoretically were to go bankrupt, you would be first to get paid before any shareholders. So to go from owning the debt to owning shares in the company, it's a lot riskier. So why are they trying to do that? Well, obviously they think the stock is probably going to go up from here, right? That's just an obvious one. They want appreciation. They want the stock to go up. And that's one of those things that makes you a little bit more bullish, like insiders buying when the stock just continues to go down. Obviously, that's not quite the case with AMC, but it's one of those things where you just got to wonder why they want to own the shares instead of the debt, and that is helping the stock to rally. Now, let's go ahead and take a look at the Ortex data for AMC as well as Ape. We will start with AMC. That is sitting at 22.9%, up 0.12% on Friday. 118 million shares that are sold short. 138.81 thousand shares that were sold short on Friday. Cost to borrow average of 160%, cost to borrow max of 351%, and cost to borrow minimum of 1%. Cost to borrow numbers on Interactive Brokers being 103%. So the numbers are very high, guys. These are record numbers for AMC. So heading into such an important earnings where literally you might get a profit, you might get free operating cash flow, well, that's going to make all of the difference. And if that happens, you are in for one hell of a ride. Now, if we look at APE, the live short interest of free float is 6.71%, up 0.33% on Friday. The live short interest is 34.5 million shares. Now, I will say this bit of news is obviously good for APE, not so good for AMC, relatively speaking. So APE is getting a little bit more, call it that, of the good news effect from this Antira Capital deal. Now, that is not to say I think APE has more potential than AMC, because I don't think so. I think a lot of people think AMC and like if you ask people, right, the average investor that is not in momentum stocks, what's APE or what's AMC compared to like what is it? Is it just a movie theater company, right? People know AMC theaters. No, they would say it's it's a meme stock. It ran in 2021 and parts of 2022, and yeah, there still could be a short squeeze. People don't think of APE in the same way, so I do think that is a huge positive, a massive positive for AMC, is the brand recognition in its former short squeezes in a weird way. So I think that gives the stock a lot more potential opportunity. Now, at the same time, the numbers we're seeing are a lot better for AMC, so there's obviously a lot more pressure on those shorts to cover on their short positions. So for those two reasons, I do think AMC holds a little bit more, really a lot more potential to go up big. And obviously APE can also do the same, but I think if APE goes through a squeeze, AMC squeeze is going to be bigger whenever it does. Hard to say the timing on either of these things. And as of right now, I would say a bigger opportunity over the next week or two until we get to AMC earnings might be APE. So right now, maybe short term, I would say APE is a little bit more bullish, but AMC over the long term, over the next month or two, right, to earnings and after earnings, gonna be a little bit more bullish than APE. And I would definitely want to have more exposure to AMC after earnings than I do for APE, guys. So there is that information. Let's take a look at the stock go tracker data for AMC. 37,000 calls that are currently in the money. Out of the money calls at 115,000. Puts that are in the money of 16,000, and 60,000 puts out of the money. Those are what the numbers were for Friday. Now for this next week, you got about 10,000 calls in the money, 37,000 calls that are out of the money, puts that are in the money at about 5,000, and puts that are out of the money at 45,000. So you are definitely seeing less activity for next week as far as options, but options are not driving AMC or APE, right? The largest option expirations that we have seen over the past couple of weeks have been our worst weeks, even when the markets were bouncing. So I think in a weird way, the lack of option activity for next week could actually give you a bigger rally in AMC and APE, believe that or not. I think that might be the case as of right now. We'll see. After all, when you get a major news event, when you get people that are flooding into options, those 1, 2, 3, 4 day options until they expire, those are what really causes a lot of that gamma squeeze effect, right? Short time to expiration, that's what can give you big moves, and that really happens very fluently and on a liquid kind of basis, right? So there is that information, guys. Not a huge option expiration for next week, but long story short, you don't have to see a large option expiration to see the stock react positively, and the same thing does go for APE. So there is that. As far as economic data and earnings that we're going to get, you really don't have all too much until Thursday and Friday. On Thursday, you are going to get, let's go ahead and pull it up. Thursday, you don't have much. It's Wednesday. You have ISM manufacturing PMI at 10 o'clock in the morning and JOLTS job openings also at 10 o'clock in the morning. And you have the Fed meeting Wednesday at 2 p.m. And that's where you're going to get the Fed raising rates 25 basis points. That is firmly priced into the markets right now. But their commentary is going to be important. What do they see at the next meeting? Or really throughout all of 2023? You're going to get some clues in that regard that could definitely move the markets. I think a lot of it is priced in. So I think a bigger story will be earnings. Now, we'll get into that in just a second, but for Friday, you have the unemployment rate and non-farm payrolls, as well as ISM manufacturing PMI. The unemployment data and the non-farm payrolls come in at 8:30 in the morning. The ISM non-manufacturing PMI comes in at 10 o'clock in the morning. Now, before we do move on to the next segment of this video, which is going to be what companies report earnings when, I want you guys to firmly know this and solidify this in your brain. Bad economic data is no longer good news. Bad economic data is now bad economic data. We are not in 2022 anymore. We're not worried about how high the Fed is going to go. We know how high the Fed is going to raise rates. We know that it may or may not cause a recession. The issue is economic growth, more so even than inflation. Unless inflation goes up out of nowhere, the problem is going to be economic growth slowing down and a recession. So bad news will be bad news. So keep that in mind. You have some potential to get bad news this upcoming week. So all of that important to note. As far as earnings, you are going to get SoFi pre-market on Monday, Tuesday after hours AMD and Snapchat, Wednesday after hours Facebook, Thursday after hours you have Amazon, Apple, and Google. This is going to be like the Super Bowl of earnings. It's been a while since Amazon, Apple, and Google have all reported earnings on the same day at the same time. Thursday and after hours, that's going to be huge. Friday, you're going to see a big move. You're going to see a big move in the markets. And I'm a little concerned about what's going on with this earnings season, specifically around Apple. You're even seeing companies like Hasbro that is massively off what their expectations are for earnings. And that's a big company that does benefit like Apple with holiday spending. And if Hasbro is doing that bad, then maybe Apple is as well. So we'll see, guys. That's only some very soft data, but might be bad in the markets. Now, in regards to that, you also do have hedge funds that are invested in these companies. If they do see their portfolio values drop because, let's say, the markets do go through a downtrend this week and next week heading into AMC earnings, it might put a little bit more pressure on hedge funds to cover on an AMC short position if AMC does react positively to their earnings. And it's all going to be about operating margins, operating cash flows, free cash flows, or net profits. Do they have any of those things? If they do, it's going to be good. If they don't, it's going to be very bad. And I'm probably going to say it a couple more times before we get to AMC earnings, but that is all that matters really from now until then with AMC stock, guys. So there is all of that information. A quick look at the technicals for, we do have AMC pulled up. You still are above that major squeeze level, so I think that is super, super solid. And you want to stay above this blue line. This, if you want to chart it for yourselves, is the same level that we were at that bottomed out back here around April 8th to April 12th in AMC after the January rally, subsequent fall, and then we're really where we bottomed heading into the June rally. You want to stay above this level, and if we can preferably get above this downtrending level, that's where I would get a lot more bullish. I'm already bullish about what we have in store over the next couple of weeks, but if you break above that, you could be in for some pretty big gains over the next couple of weeks. I don't want to say the short squeeze. I don't want to say the MOS because, hey, we've all been wrong before. But that would be the most promising thing that we have seen in a very long time. So that's what I'm going to say about AMC. We're going to have a deeper look at the technicals in tomorrow's video because honestly, that's where most people watch these videos, is on those Sunday videos. People are getting ready for the markets, so it makes a lot of sense, and I want the most people to see that breakdown as possible, guys. And it's going to be a deep technical breakdown. At the same time, for APE, you have seen a considerable rally over the last couple of weeks, just really a slow uptrend in APE, and I do think this is a very positive development, because usually when you see stocks doing this, just by and large in general, showing this much strength, you will see a big move to cap off this kind of rally. Usually it's not a straight up, just gradual and then a straight down. I do think by March 14th, you could see a lot more people getting a lot more bullish on APE, and that's why I do think the potential for in the short term has a lot more opportunity for APE than it does for AMC until you get to earnings. That's where things are going to totally change, in my personal opinion, guys. So that is it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Most importantly, enjoy the rest of your day, and I will see you in the next one.